He arrived at the markets with a glare that said he believed numbers could be argued into truth, and a confidence that made CEOs either straighten their ties or call their lawyers. Bill Ackman is the archetype of the modern activist investor, part strategist, part showman, part bulldog. He bets boldly, speaks loudly, and when he's right, the payoff can be monumental. And when he's wrong, the fall is dramatic and public. This is the story of how a son of New York real estate money turned Harvard smarts into Pershing Square, waged headline-making wars on corporations, scored one of the great hedge fund trades of recent memory, and remade the role of an investor in the boardroom. Bill Ackman was born in Chappaqua, New York in 1966 into a family that lived and breathed real estate. The son of a financier, he grew up with an intimate view of deals and balance sheets. He took that curiosity and sharpened it at Harvard College, graduating magna cum laude, and then returned to Harvard Business School for an MBA. Classrooms that taught him not only how capital flows, but how to persuade. From an early age, Ackman combined a patient, analytical mind with an appetite for confrontation. He didn't merely want to own pieces of companies, he wanted to change them. Ackman's professional arc didn't begin at the red carpets of Wall Street. After an early stint in real estate investment banking and a co-founding role at Gotham Partners, he launched Pershing Square Capital Management in the early 2000s. The firm's model was straightforward and unapologetic. Seek concentrated positions in a handful of companies, agitate for operational and strategic change, and use the tools of public markets. Activist campaigns, shareholder proposals, and, when necessary, public persuasion to create value. Ackman's voice quickly became as much a weapon as the shares he accumulated. What makes Ackman interesting as a subject is the scale and theater of his fights. He is not a closet investor. His bets and critiques are designed for public consumption. In one of his earliest and most notorious campaigns, he took aim at companies and management teams he considered underperforming or dishonest. Actions that routinely forced media coverage, regulatory scrutiny, and sometimes dramatic boardroom overhauls. He is the investor who will take out a full-page ad, appear on television, write long manifestos, and recruit other shareholders to his cause. Love him or hate him, he made it impossible for corporate management to ignore a determined activist. Ackman's strategy has produced both triumphs and humiliations. On the victory side, he engineered turnarounds and value unlocks at companies where an operational nudge and a new governance structure made a measurable difference. On the other hand, Ackman has been involved in headline-making losses that made him a cautionary tale about concentration risk and overconfidence. Few stories illustrate that dual nature better than his involvement with Valeant Pharmaceuticals and his very public short position against Herbalife. His Valeant investment, once a darling of hedge funds and growth seekers, unraveled spectacularly when questions about pricing practices and accounting led to regulatory scrutiny and a collapse in investor confidence. Ackman was burned, Pershing Square took big hits, and the episode was a humbling lesson in the unpredictable intersection of public sentiment, regulatory risk, and opaque corporate practices. Then there was Herbalife. In 2012, Ackman publicly declared that he believed the multi-level marketing company was a pyramid scheme, and he backed that claim with a massive short position. The campaign turned into a courtroom and TV stage spectacle. Carl Icahn, another towering investor on the other side of Ackman's argument, mounted a fierce defense of Herbalife and piled into the stock. The battle featured sharp rhetoric, public hearings, congressional interest, and years of market maneuvers. In the end, Ackman's short did not produce the outcome he predicted. It became an enormously expensive campaign that left his fund nursing losses and his public standing dented. Yet the episode also certified him as the kind of investor willing to bet not merely his capital, but his reputation on a thesis. If the Herbalife saga was a lesson in the perils of being publicly bearish and doctrinaire, Ackman's 2020 trade during the onset of the COVID-19 crisis was a reminder of why hedge funds exist. As markets lurched and liquidity dried up in March 2020, Ackman placed a hedge via credit protection that, by his own account and later reporting, produced returns that transformed a small outlay into billions. one of the most profitable trades in modern hedge fund history. He had predicted systemic stress, bought protection on corporate credit, and reaped a windfall when the market panic peaked. That moment reset conversations about risk hedging and highlighted Ackman's ability to move quickly and decisively when he perceives the macro environment is changing. Whether through activist pressure on single companies or prescient macro hedges, Ackman's playbook blends conviction with timing. Another dimension of Ackman's career is his embrace of new structures for deploying capital. In 2020, he launched Pershing Square Tontine Holdings, a SPAC, special purpose acquisition company, that raised record amounts and signaled how Ackman intended to play in the era of mega deals. Although the SPAC market has had its own cycle of fever and cooling, Ackman's foray showed his willingness to innovate in financial engineering and to seek ways to marshal enormous pools of capital into large-scale transactions. He later explored variations on that theme, structures designed to be more flexible than traditional SPACs, reflecting an investor who constantly rethinks the vehicle as much as the investment. Philanthropy and public life are also part of Ackman's profile. He and his family foundation have been major donors to educational, medical, and social causes, signing on to the Giving Pledge and committing large sums to organizations aimed at systemic change. His public commentary sometimes extends beyond spreadsheets into civic debates. Higher education, public policy, and university governance have drawn his criticism and activism. In recent years, his positions on campus politics and institutional transparency have drawn both applause and controversy, underscoring the reality that Ackman's opinions carry weight far beyond quarterly results. Personality plays a huge role in Ackman's public perception. He is a communicator who understands that narratives shape markets. Whether he's publishing an open letter to a board or giving a lecture at a university, he uses language to define problems and rally allies. That rhetorical skill can be a force multiplier, persuading other shareholders, cajoling management into change, or simply shaping the public's perception of a company. But the same quality, the inclination toward grand pronouncements, means his mistakes are also magnified. When a campaign fails, his vivid declarations make losses louder and longer remembered. Behind the headlines, Ackman's investment philosophy melds concentrated bets, deep research, and active engagement. He focuses on a small number of high-conviction positions rather than a diversified basket designed to blunt pain. That concentration increases upside when a thesis is right and enlarges downside when events move against him. It is a philosophy that appeals to investors who prize outsized returns and are willing to accept volatility and reputational risk in pursuit of them. Ackman's career also tells us about the changing role of shareholders in corporate life. A few decades ago, most institutional investors were content to hold and vote quietly. Activists like Ackman reintroduced the idea that shareholders could be active agents in shaping strategy, replacing management, restructuring balance sheets, or pushing for breakups. That pressure has made corporate boards more sensitive to shareholder demands and increased the stakes in negotiations between CEOs and activist investors. Ackman didn't invent activism, but he amplified it, and his public methods forced other institutions, from pension funds to retail investors, to pay attention. The life of an activist investor is one of perpetual motion. Deals are researched, spins of the wheel are taken, and stories are told. Ackman's career is studded with high drama, long-running fights, courtroom-adjacent investigations, spectacular wins, and humbling defeats. But underlying the spectacle is a consistent logic. Markets are not always efficient. Management teams often face incentives that diverge from shareholder value, and a focused, persuasive owner can unlock latent worth. For all his bravado, Ackman has also demonstrated capacity for self-reflection. Losses prompted changes in hedge sizing and risk controls. Wins reinforced the idea that timing and liquidity matter as much as thesis. Over time, Pershing Square evolved, deploying new structures, rethinking exposure, and adjusting governance. Ackman remains a relentless student of markets and human behavior. He reads annual reports, studies corporate governance, and networks aggressively. The firm's success depends as much on intellectual rigor as on public pressure. What does the future hold for Ackman? If history is a guide, His next big move will combine deep homework, public rhetoric, and a willingness to climb into the arena. Whether through a mega-deal vehicle, another activist campaign, or a macro trade, Ackman will likely continue to chase opportunities where he sees mispricing or institutional inertia. He will also remain, by design, a polarizing figure, celebrated by some for holding companies accountable and derided by others for the disruption his campaigns cause. Ultimately, Bill Ackman is a portrait of modern capitalism's paradoxes. The investor who can create tremendous value through pressure, yet who is equally vulnerable to the social and regulatory shifts that can obliterate positions overnight. He is a symbol of conviction-driven investing, a reminder that markets reward clarity of thought, speed of execution, and the courage to make unpopular bets. His story is unfinished, and that is part of what keeps observers watching. A career built on the belief that big outcomes are won by those willing to stand in the spotlight and press their case. So when you see Pershing Square's name in filings or Ackman's face on a network broadcast, know this: you're witnessing the drama of a market actor who treats companies like cause and consequence. He will keep picking fights, making the case in public, and testing the limits of shareholder power. Whether he's right or wrong in any given episode, Bill Ackman has reshaped how investors think about influence, and that, more than any single trade, may be his lasting legacy. Bill Ackman's journey is a lesson in conviction. The markets are an arena where research, rhetoric, and risk converge. From Harvard classrooms to courtroom-like debates and billion-dollar macro hedges, Ackman's career is proof that in modern markets, the loudest voice, when backed by capital and a credible thesis, can change companies, and sometimes the rules of the game itself.